Hey everyone, so I'm back with the option trading strategy. Rather than strategy, I'll say it a betting plan, simple gambling plan. But yeah, if you have decided to gamble, then do it properly with a strategy rather than like there is some edge actually. And then yeah, at the end it is gambling, but then in gambling also odds of becoming successful or odds of an event happening is evenly distributed if you survive enough and survive for large time frame and your number of bets are like significantly higher, meaning if you are betting 5 times there are chances you may lose 5 times all. I mean, even with 25% win percentage, like every fourth time you are winning, then also in 5 times or 4 times you can lose all four, like in series of your bad luck triggers and you are in series of losses, right? So rather than doing that, this system is actually going to help you where you can survive long enough, maybe not for 5 times, rather you can survive maybe for 500 times. And then if you survive, law of averages will work in your favor as well, and then your betting becomes a strategy successfully. So yeah, so capital structure is 50k. Like if you have 50k, you can, I mean, less than 50k is not something that I'll encourage. You can of course do it with 25k and 12.5k as well, but 50k is good enough and should be satisfying enough at the end of year. If you follow the system, that can be a good capital. That, I mean, the amount of money that you may generate from this system can be significant and worth your time for a year, right? So so capital structure is 50k, and this weight you'll take on only expiry days, 12k 12.5k each trade, where you will basically take 2 trades, not more than 2 trades in a day. Second trade you will take only when your first attempt is not successful. You kind of partially failed, maybe completely failed, but then if you fail twice, you will not trade for that day. So that's the capital structure, and how you will trade we'll talk in next section. So how you select your strike price? Strike price selection is basically based on, not based on the ATM plus one, or like if your nifty is at 23,000, then usual thing is to buy 23,050, but that cannot be ideal strategy given what time of the day you are trading. Because I mean, if you are just buying 50 points above or below, likely chances are that the premium will be quite high, and asymmetric growth in the premium like 4, 3 or 5x is not possible. So you'll select a strike price where premium is 12 to 25 rupees, median is like 15-16 rupees, so that will be ideal. So yeah, suppose currently nifty is at 23 23,000, and then it is like it took a direction. After that you realize that there was some premium which is 34 rupees, that you'll say that, I mean, you can say it is expensive. Then you'll select strike price where premium is below 25 rupees and above 12 rupees. So 22 is ideal in this case. This is just example. In real trading environment, these numbers may not be equivalent whatever shown here, but yeah, idea is basically you should not buy a premium above 25 rupees and a premium below 12 rupees. Okay, so whenever you buy 12 rupees premium, you expect 35 to 50 rupees. It may go up to 35 to 50 rupees. When you buy 15 rupees premium, you expect 45 or 60 rupees, so something like that. Now how you filter, or how you basically set up the criteria for trading. Okay, so you have to understand that if ATR is quite high, then it is very difficult to trade, and ATR is quite low, then I mean, among those days when you see that nifty is not moving, just moving in the range of 150 points, something like that. I mean, less than half a percent move daily, right? So then those days are very difficult to trade. So select a day. I mean, there will be regimes in the market when markets will be very choppy, and there will be regimes in market when um, IV is very high and ATR is expanded to like 2% or something like that. So those days are also very risky. So you have to avoid those days. But if it is in a range of like 0.7% to 1.5% range, then if ATR is like that, like suppose Nifty is 25,000, then 1% is 250 points, right? So I mean 50 points above, 50 point below, or maybe 70 point above, 70 point below is good ATR. In that range you can trade. Okay, and then how you will basically trade the setup. So and then setup is basically you are going to trade only when 15-minute range is either broken or reversed. How you will identify that whether it is breakout or it is reversal? So suppose if 30 days range is suppose ATR is 250 points, then that 15-minute range should not be like 70 to 80 or 100 points. Okay, it should be like 50 to 100 points. It should not be like 150 points or just 25 points, because I mean if it is 150 points, it's already exhausted. That 15-minute, within 15-minute range are only, that range is too wide, and for that day it may be exhausted already, and it is going to be range bound for a whole day. Maybe if it is 200 points, it's certainly going to be range bound for that particular day. So you should not trade that day. If it is like 25 points, 30 points, that is also very narrow range, so you should avoid. But ideal thing is your range should be 20 to 30% of the ATR. Suppose ATR is 250 points, then 20% is 50 points, and 30% is 75 points. So that range is perfect for selecting a range breakout. So if it is breaking above, then you buy option premium, call option premium basically. And then call option premium, you should select a strike price where premium is between 12 to 25 rupees. Okay, and if it is breaking down, then you should buy put option, and then premium should be 12 to 25, between 12 to 25 rupees. Okay, now when you have selected the premium, but sometime what happens, there can be days when false range breakout happens. So for that reason there is second trade. So false range breakout is basically there will be manipulation candle of 15-minute, and then there will be big rejection candle between like next within next 2-3 candles, like maybe 2 candles are not moving anywhere, and then third candle will like move up, right? Then you kind of know that there is reversal. Okay, so now you will buy like suppose it was falling market, in first 15-minute is gave sign of falling, and then third 15-minute basically 5-minute 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 3 candles, and fourth candle kind of was in the range of 15-minute, fifth candle was in the range of 15-minute, and then suddenly sixth candle gone into out of range of 15-minute, and then it formed a candle where you kind of sense that there is rejection, like there is some kind of reversal. That can be doji candle, that can be bullish engulfing, that can be inverted hammer. Then you kind of realize that okay, there is reversal today maybe. So then you will take your second bet towards call. You will close your put actually, and then when it is reversal, if it is 25% of the ATR, you should expect that whole range will get reversed. If it is 30%, then you can expect at least 50% range will get reversed. So accordingly you can bet like what a number of, I mean how many points it will reverse. Based on that, calculate your delta, calculate your, and then once you selected the strike price, you know the delta for that strike price, and then if suppose move is like reversal move is expected to be like 100 points, then delta is 0.4, then 40 points move will happen. Now if your premium is 25 points, then you can expect it to go 65 or yeah 70 rupees, that's it, not more than that, right? So so accordingly you can plan your bet. I mean these two bets only, these two types of trades in a day. There can be situation where you taking either one. Sometime you will not take range breakouts because already so much fall was happening across, I mean from last whole like 4 5 days weekly expiry, right? And then you expecting that okay there can be a manipulation candle today and then it will reverse, right? Whole week it was falling, so now reversal is expected, then manipulation candle and reversal. So you may wait for reversal candle to fall in place and then you take reversal bet. Or if it was not the case, you expect that there will be range breakout, you take range breakout trade and then you just trade with one. And there can be certain days you may have to take both and then one worked or maybe nothing worked. So there can be days of all kind, right? So next chapters are basically risk management, which I already spoke about. You have to book loss. You should not bet it for to go zero, right? I mean, if your premium was 12, it gone 6 minutes. I mean, you can book loss 16, 8, you can book loss. So, I'm not saying you bet whole 12.45k. If it is gone below more than half, then you should plan booking loss. Okay, and then free trade scaling. This is a concept where very professional traders actually do that. Whenever their trade is in direction, they recover their own capital and then they let the remaining part of the trade keep moving in their direction, and they don't try to guess the price. They on the trending days this move can be massive and they book huge amount of profits. Okay, a monster day and moderate day or a strong day, depending on kind of move on that day, they book massive amount of profits. Okay, so yeah, and then yeah, this will be your daily workflow. Check global markets and check ATR till yesterday, and then observe and don't do anything in next, I mean first 15 minute, and then in next 15 minute whether it is opening range breakout trade or opening range trap reversal trade, meaning VIX is basically getting created and reversal signs happening. So you just decide what kind of trade you will take, select the strike price based on premium cost, execute the clean setup and just wait. That's it. All right, so mindset rule, never average down and don't do revenge trade. Don't chase late breakouts. If you gone like late, something like broken and then it moved very quickly and then 100 points move happened in 5 minutes, don't do. I mean you can leave that trade and the day itself hold on losing options hoping for recovery. Don't do that. If it became half, usually it will become, why I'm saying this, 12k 6k is nothing, but your capital scales, suppose someday it becomes 12 lakhs, right? Then 6 lakhs is good enough. 6 lakh loss you booking and 6 lakhs remaining capital you preserving, that is good enough for next trade, right? So betting in the next trade. So book losses also, move stops, don't do that. Don't do that. I mean stop losses are likely to, I mean get triggered and then reversal also may happen, but discipline is discipline. You should follow stop losses, and then even reversal happens, you should not calculate if this if that is most dangerous thing in trading. Yeah, and then avoid choppy days and avoid third forces day where so much announcement, so much news flow is happening. Avoid those days also. Yeah, cut losses quickly. 50% premium should be your losses. Stop losses, hold winners, let gamma work in your favor. Trade selectively, wait for good setups. Don't trade if the day is not permitting or day is not signaling. Follow the day type detector. Basically day type I told, right? Trending day, trend reversal day, range bound day. There can be these three types of days. Range bound days you should avoid. Okay, and how to trade trending days, how to trade reversal days, that I already spoke about. Yeah, and then that reversal also should happen in first hour, Otherwise it's very difficult to trade reversals. It's easier to say but very difficult to trade. Yeah, and then recover capital at 2x. Okay, and stop after two losses. Review the trades, not PNL. Keep journaling. I will probably drop a template for journaling, basically trading logs, and then you can review after a month, 2 months, 6 months, and a year. Then you'll realize that what kind of things are playing out in the market and what kind of mistakes you are doing, and then yeah, eventually you'll become profitable if you hold enough. Maybe for a year you'll become even a successful option buyer also. That is very 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 difficult. I mean, rarest after I think 5% people become successful traders, but in option buying even 0.5% people become successful. Okay, so yeah, that's that. This is the system snapshot. I'll drop, or maybe I'll send drop the link of this, or I will share the link of this particular file. You can go through. But yeah, so far this was the video. Thank you for watching. See you in the next one.